Thanks to our friends at The Motley Fool for sponsoring this video. Check out the link below, fool.com/the smattering, to get access to the 10 best stocks to buy right now. Shares of Charles Schwab are absolutely in the gutter right now as the banking crisis or mini crisis has played out. Here's the thing. History has proven that these sorts of price declines for a company like Schwab stock are almost always the best times to buy. I'm Jason Hall. This is The Smattering. We're going to talk about Schwab right now and why it's a good time to buy. I've got my friend Jeff Santoro on here to talk about it with me. Hey, Jeff.
Hey, Jason. Schwab's been in the news lately because it's been pulled down by the banking crisis. It was sort of collateral damage when everything went down with Silicon Valley Bank, and really not for any good reason, as far as I can tell. It's a solid company, and you're right. When these kind of things happen, they can be opportunities for investors.
Well, let's talk a little bit about that. So before I'm just going to share the long-term chart here, going back to 2012. So just giving us a nice more than a decade period of time to look at how Schwab stock has done. And that's the purple line you see on the screen here. And the orange line, yellow line, depending on your color sightedness, is the S&P 500. This is total returns. And you can see even with this really steep decline over the past few weeks and going back to the beginning of 2022, the stock is still down from its peak. This is a stock that has absolutely outperformed the market by a very wide margin. Jeff, you want to talk about exactly what Schwab does? What is its core business?
So Schwab has a couple businesses that I think are worth, or parts of the business that are worth understanding. So like any financial institution, they make money on interest revenue. So basically the amount of interest they can earn on the money that you give them as a depositor versus the amount of interest they have to pay back. And because of rising interest rates, that's been heading up, which is a good thing. But they also have trading revenue because they were a brokerage historically, but they also have picked up TD Ameritrade in an acquisition that closed not that long ago. So what's interesting about that is I look at their trading revenue over the last several quarters is it stayed pretty steady, which I think says something about the type of investors that they have as clients, where even as the interest in the stock market has sort of cooled off since it was going crazy in 2020 and 2021, they've been able to hold their trading revenue basically flat, which I think says a lot about the durability of that business.
Yeah. So talking about some of the economic performance of the business, you look at these sorts of companies and return on equity is a useful metrics to look at. And one of the things you shared with me before we recorded is return on equity for Schwab is just wonderful. You know, generally this kind of business, if you're getting 8 to 12% return on equity, you're doing really well. And you see it has a long history of generating really high returns. You know, this period right here, this is the pandemic period. And those economic returns that it's generated have always been super duper high. And that means the business generally becomes more valuable as a shareholder, and you get rewarded from participation in that. My question for you, with the stock down 30% right now, over the past couple of weeks, how much exposure do you think it has to what's going on with like Silicon Valley Bank with its big business customers, client exposure, and deposits that have outflowed? How much of this is just investors kind of freaking out because of fear that it might have some tangential exposure?
I think it's investors freaking out because it might have tangential exposure, to be honest. They put out a statement sometime over the last couple of weeks, basically trying to reinsure investors that everything is sound. Now, granted, every bank would probably do something like that. But, you know, in moments like this, I do try to take a step back and look at the actual numbers. And when I look back at their most recent quarter, the one ending in December 2022, and even back from that, this is a very steady business. There have been some year-over-year declines, but that's mostly just been off of either high comps or just the natural sort of slowdown you might see as the economy isn't as strong as it was a couple of years ago. So I've seen no indication that they are in any higher risk than any other financial institution. And I think the market is giving investors an opportunity here.